Hey guys, it's David, Trade Support Group. Welcome on this nice Monday morning. Hopefully you guys had a nice weekend. Hopefully you relaxed a bit and you're starting your Monday off working smarter and not harder. If you're watching this, you're off to a good start for the smart side. So on our weekly Outlook with David, we're going to take a look from a special request we had from our YouTube channel. A request for a technical outlook on Brent crude oil. So here it is. First things first, we like to zoom out to get a broader picture of our instrument, whatever it is we're looking at. Again, Brent oil, this is a 10-year chart, just to get an idea of what type of market we're in. For one thing, as you see, we have a 200-day moving average, bullish market before, and right in the middle of this past decade, right at the start of 2015, towards the end of 2014, we had a sharp drop in the price of oil. Okay, what I mean by that is 114 a barrel. That was in July 2014 to February 2016. Went down to $29 a barrel. Okay, guys, so that's approximately $90 drop. All right, so the bulls are trying to recover still, and we use the 200-day moving average again so we can understand that we have a potential, if we have a potential, for corrections and reversals. Okay, it's not the only one we can use, but it gives us a simple indication. Okay, this is a simple moving average, 200 days. We're above the 200-day moving average now, as you guys can see. Okay, so maybe good signs for the bulls. Now, also, I'm tying in Bollinger Bands and Bollinger Band width. All right, you can decide to use which indicator. You can go and take a look at our YouTube page for different types of indicators and how to use them. We have a whole audio book on that. But for this particular case, I'm going to use these, not for any specific reason, just to give you guys an idea of how to use the two in combination. So Bollinger Band width here, we use this in order to see when there's going to be price action. And as you guys can see, spike in volume on the Bollinger Band width, and we have price action. Again, doesn't tell you which direction, just shows that we are to expect some movement. Okay, and obviously if you would have been trading during this time, you see that the candles break through the moving average of 200 days, causing a reversal from a bullish market into a very strong bearish market in a short period of time. Okay, so basically 5 years of uptrend here were all erased plus more in a matter of about a year. So big year and a half, big movement there. So something to pay attention to. And obviously we trade the Bollinger Bands just to understand when things are a bit oversold, overbought. They also help you with the trend. As you can see here, when we break through the moving average, the candlesticks stay on top of this moving average in the middle of the Bollinger Bands. Okay, doesn't really break them until up here as a small correction, and then we continue up. We bounce on the 200-day moving average. There's a nice support line here, and we've done that a couple times. We have tested this line of support out quite a few times. So what we're looking for, since we had a special request for this, we're going to take a look even further into this for you guys. Now, again, we're on a weekly chart, okay, and this is something that you're going to definitely have to be patient with. All right, with a weekly chart and the longer charts, you're looking more long-term trading. So in order for us to get an even closer look, we're going to do the weekly review, but there are some levels we want to show you a little more closer term as well. So let's do first the weekly. All right, you can see that we have a ton of touches around this area here, this zone, which is approximately $57. Okay, let's just call it $57 flat, and that's a zone. There are price fluctuations in there that you definitely need to pay attention to. Could be by 50 cents. Okay, one way or the other. But $57 is where we are on this support line for oil. This is where this strong line is. Okay, so 57. Then we can move our way up to closer to where we are now. We can take a look, maybe let's say in this zone here, which is about 61. So 57. Then we've got 61 as the next level, which is right below where we are now. Those are our two zones for buying, let's say. All right, not a recommendation, but ideally, technically, that's where they would be. Okay, next level we're looking at is approximately where we are now. You can see we broke this 65 level before. We went up to our next level, which is around 70, and we got pushed back down. If you notice this candle, the last candle, we did reach this $70 zone. Okay, you can see that that's a strong resistance zone. Okay, and pushed us back down last week. All right, where we are now is our next zone for support, again around 64. So you got 57, 61, and 64, okay, which is about where we are now. All right, could be a good buy signal here. And just understand that the next zone afterwards of resistance will be around 70, okay? So those are some numbers you definitely want to pay attention to. We're at 65, so we have potential to move up into the 69, let's say, not 70, just to be a little more accurate, 69 from here. And if we break through, we have a very good chance of seeing, especially on, let's say about 72, 75 would be the next level. Okay, so this is these are our major zones here that we need to really be paying attention to technically. Now let's switch over to a day chart so we can get some more immediate action, at least some kind of analysis on immediate day perspectives, because the weekly outlook, those may take a little while longer than some of you guys may like. Not everyone wants to be a long-term trader, and that's okay. Now you can see here, doesn't look much different. On a day chart, we are above the 200-day moving average. Good sign for the bulls. The bears met a lot of resistance here at around 56, 57. Again, that 57 zone that we were talking about. Okay, so we're above the 200-day moving average. Again, we tested this $71 area, $70 to $71. Again, it can fluctuate about 50 cents, maybe even $1, some of those zones. And we got pushed back down here. All right. Again, we are on top of a support line. If we want to zoom out a little bit to see, to get some kind of confirmation on it, you can see here many touches that run across here, a lot of bunched up candles. All right, and again, zooming in on what we've got currently going on. We are in a bullish market since October. All right, price in October was around $57. We're up $8 a barrel. Nothing dramatic and nothing overnight. Okay, but over the next couple of weeks, again, with us being above the 200-day moving average, we're on a very strong support. We're sitting right on top of the 200-day moving average. Expect some price action to occur within the next week or two. And one thing to also pay attention to, not only a bullish run, okay? Bulls would love that, but if we break back through this 200-day moving average, you can see each time it's done that, we've had a significant price drop starting here from $68 to $69 down to $60. $9 drop. Okay, we try to break through, doesn't happen. From 66 down to 56, $10. Okay, we broke it here, but then immediately within the next week we go from 64 down to 56. So $8, $9, $10 movement is what you can likely expect based on the history. So if we do break through this moving average 200, chances are we will meet this support zone again around 58, something like that, 58, 59, 57, anywhere in that zone. I would say 58, about right where the marker is now. So let's say 57.70 would be nearly a bottom on that. Be a good buy zone if you're looking at just technicals, okay? But let's keep our eye on it for the week. We'll keep you guys updated. If you have any questions, again, feel free to comment on our YouTube page, and even if you want to make a request for something you want to see analyzed, if you have any criticisms, whether they're constructive or not, I would appreciate them, because we want to know how we're doing. We're doing our best to give you guys as accurate updates technically as we can. So as long as you guys are enjoying it, subscribe to our channel, like our videos, and feel free to make requests, guys. If you want to request something to be analyzed, we'll do it for you. It's not a problem. Check us out at Trade Support Group.